afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets are significantly off the day's high. The benchmarks are holding on to just marginal gains, and Nifty fights to hold the 12,000 mark. Banking stocks are underperforming. The volatility index conversely has recovered from the day's low to be back in the green. The index is now up for the third straight day. Nifty PSU Banking Index is the only sectoral index to trade with losses. The index was up over 2% in early session. And HDFC Bank remains the top point contributor on Nifty today. However, from the earlier 30 points, it is now contributing only 13 points to Nifty's upside. Good afternoon, Neeraj. We are significantly off opening levels, and there is some selling pressure which is coming on every pullback.
Yeah, and I wonder if geopolitics is still playing, and I think we have a very special voice who we'll go to in moments from now. Alastair Newton will be joining in, and it'll be important to get his perspective on all of this. But very quickly, just a quick market check before that, covering all counts, and then we'll get in our guest on the show. 12,036 for the Nifty, just about a third of a percent. The Bank Nifty's come off too, and the heat map, we should get to that very, very quickly, just to see what's happening on the broader markets, on the Nifty at least. Well, the quantum of red has definitely increased. A clutch of names from the banking space, the likes of Yes, IndusInd and State Bank of India are already in the red, despite the Bank Nifty starting off 1.89% higher. What is doing well even now? HDFC Bank marginally in the green, about 1% and giving help. Vedanta about 3.5%. There is strength in NTPC, and some IT names, the likes of Tech Mahindra and Wipro, are doing well. I must mention Reliance Industries separately out here, up about 1% in the session today as well, and giving that bit of helping hand. Devina, what about the broader end of the spectrum?
Right, before we go across to the stocks, I just want to quickly look at the market breadth, because we started off on a very positive note, 1:9 in favor of the advances, and it would have petered off, and it's come down now almost 1:2.5 types. So it has shrunk a bit. The mid-cap space, as the large caps, have also given up steam, and individual stocks, however, some of them are doing well. So start off with ITI, good Q3. The management's talking about revenues of about 3,300 crores. So that's really optimistic, and the stock's up about 14%. Suzlon continues a small penny stock, but on a daily basis is clocking in gains. Dixon Technologies, yesterday didn't do a whole lot much, but today is kicked in once again, and volumes are extremely heavy. Sugar as a pocket is active and is buzzing. So Sri Renuka, Balrampur, Bajaj Hindustan, Praj Industries, all of these stocks are active, moving up and about. Movers other than that are Adani Green, IIFL Holdings, 49 times the last 20 days average, and the stocks moved up 10%. JM Financials is the other one, which is looking good. So individual stocks in individual pockets are doing well today. Losing in trade is SpiceJet. IOB, which was yesterday's only PSU banking gainer on the Nifty PSU index, is down in the session today. So some profit taking, they're down about 3%. And Salta Crop is the other one, which is down 4%. And finally, some stocks which are on the back of volumes, heavy volumes. Apex Frozen Food, Avanti Feeds is also up about 4%. Apex is up, and it's got volumes 243 times the last 20 days average. Capacite Infra and Amber Enterprise, following suit with what Dixon Technologies is doing, is also up on volume 60 times the last 20 days average. What else is buzzing in the futures and options space? Navneet is joining us to highlight that for us.
Thanks for that, Devina. While if you look at the Nifty futures as well as the Bank Nifty futures, we have seen some intraday unwinding of positions coming by, and there you go. Open interest is down 9%. That's giving you a sense as to how unwinding of positions has been taking place, though the premium has been maintained around the levels of 50-52. For Nifty Bank, which was underperforming in the last 2 to 3 sessions, at least in the opening trade, it was outperforming. Pull up that index as well. It's now trading once again below its 50-day moving average, but here fresh positions have definitely been added as open interest is up by 15%. We highlighted volatility index for you in our headlines. It opened with deep cuts this morning, but now it's back in the green, 14.7. Now these are elevated levels compared to where we were just 7 to 8 sessions back. Options picture, while call writing is coming back into the systems, the 12,100 call today. That's the 12,000 put, by the way. Fresh writing definitely coming in. So that's the mark which we will look to see whether bulls can defend this today as well or not. 6.5 lakh shares have been traded, but 12,100 call is the strike, I think, which is in focus on the call side. There is almost 31 lakh shares open there, and almost 10 has been added. Very quickly on the stock futures, watch out for Biocon, which is off the day's low, but there is significant amount of OI addition on the future side. Shorting seen here. Mindtree is the other one, which is up for the 7th straight day. The stock's moved above its 200-day moving average this week. Fresh longs continue here. That's Mindtree for you on the screen. And NMDC, because of Dolumanai mine, there is some confusion there. US. So stocks fallen in very high volumes on the cash side, and futures witnessing fresh shots. As you can see, the white line projecting today's volume. So falling on high volumes, futures indicating fresh shorting here. The stock, by the way, is at day's low with cuts of over 3%.
Well, let's get in global voice and somebody whose opinion would be very important to try and discern what happens in the near term. Alastair Newton of Alawan Business Advisory joins us right now on the show. Alastair, good having you. Thanks much for taking the time out, and good morning to you.
Good morning.
What's your sense, Alastair? Would this de-escalate soon enough? Because the equity markets last night in the US seem to believe so, or do you believe this is difficult to predict at the current point of time?
The latter, for sure. It really is very difficult to predict exactly what is going to happen, not just in the next few days, but over the coming weeks and I would say actually months. I think we're in for a very long haul on US-Iran relations and the Middle East generally. And there's two reasons why we need to be very cautious about making forecasts. First of all, the Iranian regime is more than somewhat opaque. And it is quite difficult to know exactly what they are going to do next in terms of retaliation, what they're going to do in the longer term as well. They probably don't know themselves at this stage. They will be looking for options to retaliate for the assassination of General Soleimani, and they will be looking for options which are consistent with their overall strategic objectives, principally, of course, consolidating their regional foothold in and around Iran. We've seen General Soleimani's successor in the last 24 hours or so committing to push America out of the region altogether. Whether they can achieve that or not is a moot point, but I don't think we should doubt the seriousness with which they regard that as an objective, starting, of course, with Iraq, where we've already seen the Iraqi parliament pass a non-binding resolution in favor of the withdrawal of all foreign troops from the country. And then, of course, on the other side of the equation, we have the Trump administration. Donald Trump, ever mercurial. You can never be quite sure what he's going to do next when it comes down to the detail. We may be sure, though, that whatever Donald Trump does or says next, he will believe that it is consistent with his best interests, with his primary objective, which is winning the 3 November election. And I think because of that, his options are actually somewhat limited. On the one hand, going after Iran plays well with the Christian evangelical section of his base, at least, which is probably something between 35 and 40% of the 44% of American voters who continue solidly to give him positive approval ratings. On the other hand, slowing economy, higher gasoline prices, American body bags coming back from the Middle East, not good for his re-election prospects. So it's hard to know exactly which way he's going to jump going forward as well. Bottom line, more uncertainty ahead, probably more volatility. But for the time being, I think investors have got this about right. We actually saw a very measured response, both on Friday, immediately after the news of General Soleimani's assassination broke, and again yesterday when Brent crept a little higher. Equity markets, of course, we did see quite a lot of action in. But on the whole, investors are saying a lot of uncertainty, lots of tail risks, but we don't want to overreact until we've got a clearer picture of how exactly things are going to evolve going forward. And we've, of course, this morning and late yesterday, we've seen a bit of a sell-off in Brent. And I think all of that is perfectly reasonable. But the risks are very much skewed to the downside, and I think investors need to keep that firmly in mind going forward.
Alastair, what does it do with regards to individual nations who are heavily dependent on Iran for oil imports? We've got India, we've got 90% of our oil imports. We are heavily dependent on oil imports, which affect our import bill pretty negatively. You feel that for emerging market and especially for emerging market currencies, this could be a bit more damaging?
Well, again, I would suggest that we keep this firmly in proportion. Clearly, if we do see a significant and sustained spike in the price of oil, it is not going to be good news for emerging markets, which are net energy importers. And of course, India is pretty close to the top of that list. However, if we compare the market action on oil over the last few days, even at its peak, we were looking at something like 6 or 7% rise relative to, let's take 1 January as our benchmark. Compare that to the market action we saw in the immediate aftermath of the attack on Saudi Aramco on the 14th of September, when Brent went up, albeit briefly, by almost 20% to roughly the same level as it peaked yesterday, in fact, just over $70 a barrel. Now, clearly, if in that sort of situation, it's a bigger shock. If that level had been sustained at that time, I think it would have had a bigger impact. But those emerging markets to which you refer, India included, have already had some time to adjust to the price increase we saw after the OPEC deal was struck at the end of the first week of December, which pushed Brent crude up from closer to $60 a barrel, somewhere around 61, 62 before the meeting, to just over 65, 66 or so. So gradual increases, I think markets can, and indeed economies can adjust to relatively easily. A rapid and sustained increase, as I said, would be a different matter altogether. At this stage, that is not what we are seeing. If anything, subject to more rhetoric coming out of Tehran and Washington, which almost certainly there will be, and how threatening that actually sounds, it wouldn't surprise me at all to see Brent crude easing back towards the 66 or so, which it was on the 1st of January, back a little bit more. Where things are today, I don't think emerging markets, India included, needs to worry too much. And I would suggest actually that the fairly sizable sell-off we saw in Indian stock markets yesterday in particular is probably an overdue correction which has been triggered by concerns about oil, rather than something which is fundamentally related to the price of Brent crude.
Yeah, it's interesting you point out the equity markets and how India's been doing, because while the rest of the globe did correct in yesterday's session, most of the indices have already recovered, and on a relative basis, India still underperforms some of the other global equity markets. Do you believe that while all of these uncertainties are still in place, equity market investors yet will see an opportunity in this?
If I was an equity strategist, I'd give you an informed and authoritative answer to that. But since I'm not, I'm actually going to duck that question altogether and say to you, well, Indian stocks, for my money, have been overvalued for some considerable time. I'm on the record as saying this all the way back to before the last Indian election.
Alastair,
obviously, we saw a surge then.
Yeah, not specifically Indian equities. I'm talking about global equities. Nonetheless, equity markets, global growth, the economic situation across the board is looking a little bit iffy, so to speak. But the equity markets, quite contrarily, are doing the opposite of that, which is making record highs. And that's why the question.
So you want to look globally. Okay, well, let's take a look at it globally. I have long been of the view that we do have something of a bubble out there in equity markets. The economic cycle is aged. It's been going on for a very long time, as you know. That doesn't mean that it's going to end this year. We started 2019 in a very similar mode, saying this is an aged economic cycle. The bubble could burst this year. It did not. The IMF and other authoritative bodies keep slightly lowering their global economic forecasts every time they have one of their 6 monthly meetings. The global economic forecast seems to come down by a percentage point or two, a decimal point or two, 1/10 of a percentage point or two. But the global economy is still chugging along at a fairly respectable pace. Now, I want to put this point to you. There is one person in the world today who arguably has a bigger interest in keeping the global economy, and in particular the US economy, chugging along in reasonably good shape for the rest of this year, and that is the President of the United States of America, Donald Trump. It is the economy, stupid, as Bill Clinton famously campaigned on 1992. And 1992 is particularly relevant because that is the last occasion when a sitting US president failed to win a second term, George H.W. Bush. Now, of course, Donald Trump is no great historian. I think we could all reasonably accept that. I dare say Mr. Trump himself might accept it with characteristic Trumpian modesty. However, I am absolutely sure that he is well aware of factors which contributed to not only to George H.W. Bush's demise in 1992, the economy, tax increases and so on, but also to the demise of Jimmy Carter in 1980, which was at least in significant part a result of the Iran hostages siege. And that again raises the whole question of how Donald Trump is going to play the Iran card. My bet is that he is going to want to keep the economy strong. He's not going to want to provoke anything with the Iranians, which is going to lead to some sort of latter-day equivalent of the Iran hostages siege back in 1980. And he certainly is going to want to keep equity markets in good health for the somewhat perverse reason that he seems to regard the performance of the US stock market as being an indicator of his overall stewardship of the US economy. This despite the fact that fewer than 50% of Americans actually benefit directly from stock market appreciation. And amongst the Trump supporters, amongst his base, I would hazard that the proportion who do not benefit from improvements in equity valuations is actually a good deal higher than for the general population as a whole. So I think we can probably stick with what is my base case for this year, despite the geopolitical turbulence of the last few days, that overall we'll probably manage to chug through 2020 in much the same way as we chugged through 2019, which probably means that equity markets will continue to perform reasonably well.
Yep, Alastair, and it was the liquidity in the global markets due to which we saw those stellar returns coming up for equities, not just in US market, but even for other markets like India as well. Thank you so much for joining us today.
Exactly.
And taking us through your views on world equities. All right, and shifting focus back to markets, we're at 12,039, so we're off the lows also of the day. But remember, we had a gap up opening where index crossed the mark of 12,100 in the opening session, but we've given up majority of the gains. And let's get more views on the markets then in this turbulent times of geopolitical risk. Let's go across to our next guest from Kotak Securities, where the brokerage has set its year-end Nifty target of over 13,000, and we've got Sanjeev Zarbade of Kotak Securities joining us on the show now. Hi, Sanjeev. Good afternoon. And thanks a lot for joining us. Since you guys are expecting 10% returns to come on Nifty in this calendar year, tell us, according to you, what will contribute to those gains? Which are the pockets? Is it the banking, the entire financial space, or you also see other heavyweights like IT contributing to those gains?
Yes, so thanks for having me on the show. Yeah, you rightly pointed out that we have a Nifty target of 13,300 for 2020. And what we believe is that what we observed in 2019 was that although the economic growth was slowing down, but the markets continue to remain firm, especially after the announcement by the government measures. So we believe that the same trend, in fact, the same kind of divergence will also continue into 2020, and a lot will be expected from government measures because most of the gains in 2019 came post September announcement of tax cuts. So I think going into 2020 also, government announcements, government measures in driving up demand will be a key trigger. Having said that, 2021 we are definitely expecting a much higher earnings growth, almost 25% in Nifty earnings, and that will be led by very strong numbers from corporate banks. Now, in addition to that, we expect good numbers from telecom industry, some of the large caps, a few IT companies as well. But we believe that there could also be some catching up in the small and mid cap category, especially the small cap category, because in 2019 we saw that while the Nifty gave a return of 12%, the small cap index was down 10%, so almost a 22% outperformance by Nifty as compared to the small cap. So I think there is value in the small cap space as well, and if it is supported by corporate governance and earnings growth, then some of the small cap companies could be good winners in 2020.
Sanjeev, in fact, that's what majority of the market experts we've been chatting with have said, that the broader markets which have not given you returns for the last 2 years, maybe this could be the year of catch-up as well. But let's drill it down to individual stocks where you guys are positive on. And to begin with, M&M, we recently got the sales number for the month of December, and tractor sales was something everybody was talking, because after a while we saw growth coming in there. Of course, valuation-wise, majority of these companies have been trading below their historical averages. Why is Mahindra & Mahindra looking good to you at current levels?
Yes, so among the auto majors, we are seeing the sharpest declines in auto numbers in two-wheelers and commercial vehicles. However, M&M numbers are still much better. Especially the tractor numbers have been subdued, but not down as much as the two-wheeler or CV numbers. At the same time, we believe that the improved monsoons that we saw in 2019 will definitely improve farm output and farm demand going into the next year. In addition to that, the valuations of M&M is also quite reasonable and attractive, given the large cap size of the company. So considering all these factors, we are preferring Mahindra & Mahindra as one of our picks in 2020.
Okay, that's Mahindra & Mahindra within the auto pack that Sanjeev likes. The other one, obviously interesting that you've picked on SBI for 2020, Sanjeev, and not the usual suspects, which is those larger private banks. HDFC Bank, for starters, the Q3 update was equally exciting from an equity standpoint and from an investor standpoint. But SBI too has its hands full with the kind of recoveries and the pace of recoveries that has started to pick up. So you believe that the potential upside in an SBI is greater than something that you would get if you were to invest in your usual names like an HDFC Bank, an ICICI Bank, an Axis Bank?
Yes, definitely. In fact, in our coverage universe, among the corporate banks, we like ICICI Bank and SBI as well. Both can deliver very strong earnings numbers in the next 2 years. But the valuation wise, SBI is at a very attractive level as compared to ICICI Bank. ICICI Bank, there is not much of upside to our target price, but SBI has. And if you see in the December ending quarter, there have been some major resolutions that have already happened. And even today, we are reading reports that NTPC has bought the Jhabua power plant. So going ahead in 2020, we see more of such resolutions happening. Loan loss provisions coming down. In fact, there could be some write-backs as well. So even without very strong loan growth, because the loan loss provisions are coming down, these corporate banks will deliver very good numbers. In case the economic growth revives and the loan growth also picks up, then we can see a good 2 to 3 year kind of a earnings as well as stock return in the stock in SBI. So that's the main reason we like SBI.
Okay, that's SBI for you. Remember, saw a sharp correction of 4.5% in yesterday's session, bringing it down sub 320. Recently, just a month or so ago, had touched highs of about 350 odd. Sanjeev, the other one on your list is Varroc Engineering. Why do you like this one?
In the automobile space, we are more positive on the passenger vehicle manufacturers, especially the cars. We are negative on the two-wheelers, and we are positive on Ashok Leyland, but mainly from a valuation perspective. On the other hand, auto components have a twin story. They have a domestic market growth as well as exports. So while the domestic market demand because of these OEMs is weak, but the auto components manufacturers can definitely ramp up their exports. So we believe this story can actually pan out, and that is the main reason we like Varroc Engineering. And the valuations have also become attractive. It is also kind of a contrarian play, because especially when the auto space is seeing major headwinds, we are a bit contrarian on the auto component side. And at the same time, we are also seeing that there is not much pressure coming from the commodities side. So broadly, if they can really make their export story grow, penetrate more markets into the Europe as well as US, then definitely there is a growth opportunity available for companies like Varroc. So that's the reason we like the company.
Interesting. Varroc listed somewhere in July 2018, the issue price was 967. Of course, it did touch levels of 11,050, but since then, it's been on a downward trajectory. In fact, it's almost 50% lower than its IPO price right now, trading around 444. Of course, headwinds around Brexit also impacted this company, and slowdown seen in the Indian automotive space as well. Sanjeev, from the metals pack, you've chosen Vedanta. Why Vedanta? Why not the other companies? What's looking attractive here?
Yes, so in Vedanta, we like, it is mostly the valuation part that we like in Vedanta. Definitely the company is expanding and adding capacities in its metal space. But we believe that if the trade dispute between China and US kind of settles off, then there could be upside in the metal space. And we have seen that in the last 2 quarters, the metal prices were quite range bound, and only now they have started to kind of start picking up. So we believe that if there is stability between these two economic giants, then the global economy will also start looking up, and that will lead to improved commodity prices. And in Vedanta's case, the valuations are again very attractive. The dividend yield is also quite good in the company. The cash levels are also pretty strong. So overall, it's a strong balance sheet company with attractive valuations.
All right. That's Vedanta, which is another pick coming in from Sanjeev. And the last one, Sanjeev, is KNR Constructions. You've got a fair value of 305 put out on the stock. You're pretty optimistic with regards to their revenue visibility for the next 2 years, and also a slew of order wins that the company is projecting for 2020. What's your sense? Why do you like this one? Could you highlight a little bit more in terms of the reasoning?
Yeah, sure. So if you look at the construction space, you have in the large cap, that is the Larsen & Toubro, and then you have lot of construction companies which have a mix of corporate governance standards. So, but within them, KNR Construction, in our view, is one of the best managed company in terms of corporate governance. Even in terms of execution, the company has a tradition of completing projects on time, and also in a position to collect bonuses and incentive from the promoter for timely completion. Another risk with a lot of construction companies is their balance sheet issues and high working capital as well as the debt. On that factor also, KNR Construction scores as compared to other construction companies. The order book is good, almost 2 years visibility is available for the investor. And now the stock is available at attractive valuations, and that is one reason being that in the last 6-8 months there has been some slowdown in awarding of construction contracts, because a lot of contracts had been awarded in the previous fiscal itself. So as a result of that, we are getting the stock at a very attractive valuations. It's a quality play. There's not much of a risk from a corporate governance point of view. And considering these factors, we like KNR Construction in the construction space.
Okay. That's a list of stocks there coming in from Kotak Securities on what you can watch out for 2020. Sanjeev, we leave it at that. Thank you very much for joining us and enlisting those for us.
Thank you.
All right, that is a quick take on the markets. For now, the Nifty is up almost 0.5%, 12,047. Well, not above 12,100 that we scaled in the morning, but if we have a close above 12,000, that's probably the silver lining of today's session. The government, the other part of it is the macroeconomic data points to watch out for. The government will be releasing its first estimate on growth for the full fiscal today. Economists across the board are expecting the numbers to be somewhere closer to 5%. Pallavi Nahata reports. Listen in.
Economists polled by Bloomberg expect the first advanced estimates of GDP growth in the current fiscal to be pegged at 5%. The government, which is scheduled to put out the number later this evening, will also base its fiscal calculation on this estimate. Let's take a quick look at some of the macro indicators that will influence this number. India's quarterly GDP growth has been slowing down for the past 6 quarters. The last reading came in at a 6-year low of 4.5%. Average growth for the first 6 months of FY20 stands at 4.8%. The government has been carrying the burden of new investments for quite some time now, and the numbers don't look too encouraging, falling 1% in the second quarter compared to an increase of 4% in the months of April, May and June. What could cushion the fall is the recent uptick witnessed in private consumption expenditure. But economists like Sugata Bhattacharya of Axis Bank are being cautious, citing the drop in capacity utilization. The RBI's monetary policy statement has pegged it at 68.9% in the second quarter. The central bank has subsequently revised its own growth estimate from 6.1% to 5% in FY20. Economists like Indranil Pan and Gaura Sengupta have also pegged full-year growth at 5%, citing high-frequency indicators like monthly auto sales, manufacturing and services PMI, and have gone on to argue that recovery in the second half will be slower than what had earlier been estimated. One of the ways to revive investments is to lower interest rates. But the Monetary Policy Committee, which has already cut rates by 135 basis points over 2019, also chose to opt for a temporary pause in the December policy. Barclays economist Rahul Bajoria argues that the recent spike in consumer price inflation leaves the 6-member committee with very little room to cut rates further, since it's substantially higher than the RBI's medium-term target of 4%. He, in fact, expects retail inflation to breach 6% over the next few months. So coming back to the all-important fiscal deficit number, the government, which is staring at a distinct possibility of breaching the 3.3% target, can opt for the 0.5% escape clause provided for by the FRBM review committee, which would allow the deficit as a percentage of GDP to go up to 3.8%.
All right, that is what we are expecting in terms of the advanced GDP numbers. The estimates of that come out today in the evening. So we'll keep a track of that. 5%, that's going to be a little bit of a disappointment coming in nonetheless. But I just want to quickly pull up Godrej Properties, and that stock has just gone through the roof suddenly. I mean, there's no apparent reason, but the stock seems to be up 5%. The whole day silent, nothing. Stock opened positive, went down to about 961, and it's at 72 in a market which is actually not doing anything. And from levels where the market started to drop, the stock held on. That's at 972. Let's bring in Sachidanand to actually figure out what's happening here. Sachidanand, the Uttekar of Trade Bulls, is joining in right now. The stock fell about 3.5% to 4% yesterday, Sachidanand, and you're seeing this sudden pullback in the stock. What's happening here for Godrej Properties?
Well, good afternoon. Yes, we have seen a good move in last couple of hours in this particular counter, especially if you look at the formation. The move started with an open low, and it has managed to breach above its previous day swing high. So probably we may see this particular phenomena of momentum getting carried forward. Nothing, really significant on the price scale, but definitely the way momentum is shaping up, probably we may see an extended move towards a 980,000 kind of a level. But I think, fresh long positions should be only added in case if a stop loss close to 940 is comfortable. So if you really want to chase the momentum, I think the reward to risk is not that sweeter. But in case if someone is already riding on to this particular move, 940 would be the stop loss for the trade. But looking at the flow, probably we may see 1000 levels getting achieved irrespective of the market conditions.
Okay, that's Godrej Properties. Let's talk about the index call then, Sachidanand. We had a big stellar start, couldn't maintain it. But nonetheless, from yesterday to today, technical analysts and their opinion seems to have juggled a bit more. What's your sense as to what should one do on every rise? Should they sell or should they buy more?
Well, the stance that we are taking is valid only for 2 days next, because if you look at the entire structure, we have been talking about a broadening formation on the Nifty with a headroom somewhere close to 12,400 and the base somewhere close to 11,900. So this particular move is not really a surprise, and the way today's price action is shaping up. So if you look at Nifty, we clearly have an inside bar kind of formation. On the contrary, if you look at the momentum averages, they are converging. So probably, it will be wise to say that it's a sell on rise kind of a condition for next couple of days. Even if you look at the VIX, which was supposed to cool off after hitting the levels close to 15, it has not cooled off substantially. So probably we may see an uptick in VIX as well. So going forward, I think, it's good to maintain your shorts. If you look at from a level perspective, I think this entire phenomena will only change in case 12,200 is breached in a day or so, which looks very unlikely. And on the contrary, I think there could be a slippage towards say 11,900, 11,930 kind of a zone. So definitely, one should try to play this particular move on with a short bias, but the validity for the move could be next couple of trading sessions max. So we are not really saying that the markets have topped up or anything like that, but probably we may see a further base getting shifted from 12,000 to maybe around 11,900, 11,850 kind of a threshold. But if you look at the setups, I think Bank Nifty is somewhere we are very confident, and the weakness it looks more confident. So probably with going with the setup, the level to watch out on the Bank Nifty from a swing perspective is now resting at 31,900, and the entire equation will change in case Bank Nifty starts trading above 31,900. So it is wise to chase this particular move in a high volatile environment with a put option. A deep in the money put option is something that we are recommending. 31,900 put should be used. It is quoting somewhere close to 565. The stop loss for the trade should be placed at 385, and the expectation is that we may see levels close to 30,900 in a day or so. So the put option could swing towards a 980,000 kind of a level. So the overall setup is on the bearish side, which can be participated via put option of 31,900. The stop loss for this should be placed at 385, and the probable target should be around 1,000.
Then I have a question on your strategy. If you're bearish on the markets and Nifty Bank, why would you advise buying deep out of the money put strike, which is expensive? If you're expecting the Nifty Bank to scale lower, one can look to buy even the lower level strikes, which are cheaper right now in terms of premium.
Well, definitely, if you look at the entire environment, it's a short only kind of an environment right now unless we don't see a swing above 31,500. The reason going with this particular option is, your risk is, curtailed to a certain extent. But if I go for deep out of the money put options, in case if we see a cool off in VIX, then probably we may not get the kind of premium that we are for booking profits. So it's better to go with some in the money kind of a put option and place your bets accordingly. The validity of the trade is maximum up till this expiry or maybe before that. So we may see a swing below today's swing low, and I think that will be a point wherein positions should be squared up. We are not expecting a bigger fall in the market.
Okay, that's about the Nifty Bank strategy. But tell us, in terms of individual stocks or stock future, what strategy are you recommending?
Well, it's better to be on the long short side when it comes to stocks, because I think even in this environment we are getting some buying ideas, especially if you look at the pharma space. Dr. Reddy is something that we have been talking about and we have traded on the positive side. So if you look at the entire concentration, the 2900 call writers were very adamant, and we did not see any shifting in the last two trading sessions. But today, if you look at the price action, clearly there is this discomfort which has happened irrespective of the market condition. We are expecting that this particular move can extend right up to say 3000 kind of a zone for Dr. Reddy's, which should be played via this call option of 2900. Which should be on the buying side. The stop loss for the trade should be placed at 76, and the probable target that we are looking at is around 125. So this is on the long side. On the short side, the structure of Bata India looks relatively weak, and probably we have seen a healthy pullback in this particular counter. Right now, we on the 180-minute scale, clearly there's a falling tree kind of formation, which is compelling enough to for me that we may see a deeper swing coming in this particular market. The stop loss for the trade should be placed at 1740, and some short positions should be deployed right away. The overall target that we are looking at is around 1680.
Okay, so those are two stock future strategy, and both on consumption stocks, by the way, which have done pretty well. One of them is Bata. Let's move on and talk about the widespread protest against Citizenship Amendment Act in the state of Assam, which are said to be hurting microfinanciers' collection efficiency in the state. In fact, reports do suggest that a few women-centric organizations are even demanding a ban on some microfinance institutions, and have also called for an inquiry into the ways they operate. Joining us now on the show is Mr. H.P. Singh, Chairman and Managing Director at Satin Credit Care. Hi, sir. Good afternoon, and thanks a lot for joining us. Give us a sense of the ground situation. Since a company like yours, you do have exposure of nearly 525 crore in the state of Assam. Has that impacted your business? Has that impacted your recoveries in the state?
See, our exposure in Assam right now is about 3.5% of our total AUM. So this is close to about 425 crores to be correct. That is what our exposure in Assam is. The thing which is happening now in Assam after the Citizenship Amendment Bill and the protest which has our collection efficiency, which had dipped down during the curfew days as well as when the internet was down to about 40% or so. Now the collection efficiency has bounced back to about 80% or so. That is there, but where earlier when it used to be in October, when there was a call given by certain association on probably giving it a waiver and everything, that probably has had a limited impact during that time only. But right now, after the bill was enacted, the collection efficiency is now on a day-to-day basis increasing gradually.
So you're suggesting collection efficiencies bounced back from those lower levels of 40% to 80%. Sir, but tell us, has that impacted your fresh disbursement as well? And give us a sense how the quarter gone by has been for you.
So yes, definitely it does affect disbursements for a short period of time, and we are definitely trying to go slow in Assam because of the protest as well as the internet being down, curfews being held. So the disbursements will be less, but whatever disbursements we are doing it only on those areas where the impact is going to be negligible. That is there. The quarter, definitely, yes, it is rebounding back. So whatever has happened during the course of this this whole protest as well as there in December has probably died down now to a large extent. So the disbursement will start picking up now from the quarter onwards.
All right, Mr. Singh, while these are the issues at hand, the other thing that you've also done is that you have received, some funding. You've got ECB funding with about 15 million from Development Bank of Austria. Could you highlight, what these funds are going to be put to use to?
So definitely, yes. I think, once we talk about, the probably negatives what microfinance definitely has, this is a reaffirmation of the faith that microfinance still holds true for financial inclusion to a large extent in India. And that is the reason why this is the first funding done to a microfinance institution by the Development Bank of Austria in India to us. And this will actually give us growth capital for us to raise our geographical diversification as well as to our existing customers. We'll be able to lend more. And it comes for a 5-year tenure and definitely gives us impetus in terms of actually bringing back foreign investors who are willing to look at financial inclusion and microfinance space in India to a large extent.
Okay. Overall, do you feel at this point for the microfinance blending industry, growth rates could come under some amount of stress? Or for that matter, microfinance as a space may not see the struggle as much as some of the other NBFCs?
See, I will give you a perspective. I think, probably what has happened is that there has been a scale of growth which goes around 30 to 40% by some players. But we as an organization, we've kept our growth rate very, very minimal. We would like to grow only by about 25 to 30% year on year, because we feel that doing portfolio quality growth is far more required rather than just having an unbridled growth based on numbers. So for us, where microfinance really works out and what we really want to do, we want to focus on quality rather than quantity. So for us, a growth which is 25 to 30% year on year is probably sufficient growth enough. Rather than getting into digits like 40%, 50% or above.
Well, that seems to be the thought process of some of the larger NBFCs as well. But 7,182 crores in terms of the outstanding portfolio. What is the target to achieve?
I said 20 to 25%. That's it. That's what we are looking at. On a year basis.
I wonder if the liquidity in the system has improved a little bit, or is it still very tight, Mr. Singh? Any thoughts there?
It's ample, this was ample even during the last, 1 year or so, even after the crisis which happened in the NBFC space. And you can look at from the Development Bank of Austria's funding that, for the first MFI to be funded in India has been done by them. So liquidity is absolutely no issue for us.
Okay. Well, we wish you all the best for collections in that case. Thanks so much for joining me today and giving us that perspective.
Thank you.
That's Satin Credit Care. Talking about those issues. Let's get in one more perspective. Rahul Mohinder of Vidatex Software joins us right now on the show. Rahul, good morning, good afternoon rather. The resistance of the market to move higher seems to be apparent today. The 1.9% uptick in the Nifty Bank was sold into, and the last 15 minutes uptick on the Nifty and the Nifty Bank have been sold into as well. What's your sense? Near term, are we headed lower?
Good afternoon. I think, first of all, what one needs to bring into perspective is a lot of traders are trying to come to terms with the fact that the drop that we saw yesterday, was it a breakout downward? Was it something that ruins even the medium-term to long-term picture? And I think, Neeraj, that's where I want to come in from. That's a level which is still holding. So if you're looking at on the upside, we've got resistance closer to 12,220. That's a very important or a landmark medium to long-term level. I think once we get above that, can we get the next round of traction? However, on the downside, if you look at what happened on the Nifty yesterday, yes, we collapsed. Yes, we had a big drop. But, it held that level of 11,950, which was a good thing. Now, I'm not saying that necessarily means it will continue to hold. I definitely think it is being challenged. This is a point where you have to be watchful that if 11,950 breaks down, we could get into a bit of a severe-ish down move. So from a Nifty perspective, I still think you are within those levels of 12,220 on the top and 11,950 at the bottom. One has to tread with caution here. One has to keep the levels at play. I am a little worked up looking at the Bank Nifty, and I think that's where I get the first feelers that maybe this thing is going to break on the downside than the upside. And that's really because of the fact when you look at the heavyweights in SBI and ICICI starting to collapse and break key levels. So 31,150, again, a very key level which was held on to even in today's trade, yesterday's trade. I think that's the level which I'm going to watch for. Again, these levels are not very far away, 150 points odd from here. I think that's where I'm going to look, if we break down those levels, that could well be a first signal that the market wants to move down 5 to 6% on the indices.
Okay, so, well, the stance, the larger long-term stance doesn't change, maybe short-term gyrations, but today's moves just seem to be that bit indecisive, Rahul, and which is why my question. Nevertheless, so in light of that, what is it that you believe are tradable options currently? Would you trade the index at all within your longer-term bullish stance? And if not that, what are the specific stocks?
I think within the indices, I think what I'd probably look at is definitely having put options, below 31,200 on the bank Nifty or 11,950, on the Nifty. So I think that's something which you could use to secure long positions. But again, from a directional perspective, I would really not like to take a fresh trade at these levels. I would be more tilted to taking a sell once the support levels which I mentioned breach. But stock specifically, let's come at two different ideas. I have one on the buy side, and this is going to be on PCS. Here I'm looking at, again, medium to long-term strength. I guess the whole rupee equation is also helping the stock quite a bit. So 2270 is a target I'd be looking at buying PCS for. I'll keep a stop loss at 2170. On the sell side, I think LNP is probably going to head downwards. So I'm going to use, this little rally up that we've seen intraday again as a selling opportunity. We're looking at 1295 being targets on LNP. I'd keep a stop loss of 1331 for the stock. Again, the stock's made multiple attempts over the last week or two to get past the 200-day moving average, but unable to sustain. So I think it's really going against it. So my whole sense is LNP could really see our sharpest down move, especially if it, starts closing below levels of 1310.
Okay, so those are two strategies in the stock side coming in from Rahul. But moving on, I think there is some selling that you've seen. Index is now, by the way, at 12,030. We've not yet breached yesterday's low. Let's see if we defend the 12,000 mark or not. But since we are on market, Samir Arora of Helios Capital says it is important to keep an open mindset while investing in the markets. And in conversation with BloombergQuint earlier today, Samir also talks about the appropriate approach to investing. Listen in.
Fair thing is, do what you want, but don't come and give us this magic formula as some Baba is saying, because these guys seem to be totally wedded to one formula that 50p is very cheap and it should be 80p, and we know it is not. It is happening right now. Do it if you want. Don't make a drama and basically justify with every nonsensical argument to say that that is right. So for me, I say I'm open-minded. I may have mix of both, but if I do one or the other, I will say this is my current view, this is my current positioning, this is how it is. I have to follow the market. I have a stop loss, blah blah blah. But anybody who commits, I think in the end loses, and I've seen it for 25 years. So many guys have come and gone just because they over-committed to. You're operating in one country. Within that country, to choose a magic formula which does not exist is not needed. Be open-minded, but it is true that right now the companies that are doing well are continuing to do well, and maybe a little bit is broadening, or it was broadening in November, December, and we hope that it broadens with time. But right now it's not obvious. I agree.
Right. So Samir, since you already mentioned and we spoke about it in your first few answers, where you said that India is still relatively underperforming the rest of the other markets which are trading at record highs, and it looks like the earnings season going forward as well is not going to turn out to be too great. Bottom line obviously aided by corporate tax, and that's going to be perpetuity, but top line to come back into full glory is going to take a lot of push from all the engines to kickstart. Do you feel that then, if for an investor, it's more about using every dip as an opportunity, because you have to invest, right? If you've got a certain allocation that you want to make to the equity markets, you have to invest. So what is, according to you, the appropriate approach?
What you do depends on what you have done. So when we say use every dip to buy, we are not doing it because we are already invested. And we are trying to say we have to pass this month, 2 months, and then see. If somebody is starting today and today is his first day of investing, he should definitely use every dip to buy. But if you have invested 70% and a dip is coming and you have 30% debt and you can put into equity, you may not do it for a few months. It doesn't matter, because it's also not the situation that it's a runaway and that if you didn't buy this dip, God knows what you will miss. So broadly speaking, these lines have no meaning because we don't know what the investor currently has. If a current investor already is 70% invested, and even if he's willing, I can say, no, don't worry, wait 1 month, let the budget be out, let this uncertainty be out, let us see in 1 day whether Iran reacts, let us see in 30 seconds whether US is going to go up 1 more day or not. It doesn't matter, you are sufficiently invested for the moment. So there is no answer to these questions that every dip should be bought. But if you're starting today, you should not even care whether there's a dip, you should buy, because in the end it will all work out. All these strategies are more like tactics for the marginal trade. For an absolute longer term trade, there is no discussion. Equity in India is better than everything else in India, and equities in general are better than everything else across the world. You can have 100 years of data if you want. I can give you 200 years of data for US and stuff like that.
Which brings me to my second point. While you already said that equity is the primary focus, does asset allocation in such times make any sense to diversify a bit? I mean, don't have all the eggs in one basket.
Well, because I'm a non-resident Indian, I am diversified geographically, and therefore, US and all have been very good. So that diversification, I think, should be done by everybody, which is have 5, 10, 2% in non-India, because there are companies outside India which are pretty good. In diversification within India, a little bit debt and all people can have. Basically, the whole idea here is that you should not have so much in any one asset that when that asset does badly, you will have a heart attack, or that you will panic and you will never come back to that asset class. Because even though we know equity is better, it is obviously more volatile, and it depends on your nature and your experience and whether you are treating equity as an investment while your main money is coming from a job, or you are like one of these young guys because of a bull run in mid caps in 2017, left your job and said, I will be a full-time trader trading mid caps. So these are all different profiles. Otherwise, have enough so that you don't panic when the market falls for a few days or for a few weeks or for a few months. But broadly speaking, equity does better if you can handle the volatility.
Well, select equity is certainly doing well in today's session, and let's talk about all of that. We've seen a bunch of stocks doing okay, a bunch of stocks not so much. Avinash Gorakhshekhar of Jointer Capital Services joins us right now on the show. Avinash, must say, when we look at the large caps, while there are select names like the IT pack, which is probably still under a bit of cloud, the financial names which have done well, the likes of HDFC Bank, are doing much better today. What did you make of that? And do these numbers give you a belief that one can go out and buy afresh into the big boy?
I think, Neeraj, the kind of business update which they have given out for Q3, I think clearly spells out that the deposit growth as well as the loan disbursement growth have been pretty strong, and I think this clearly indicates that Q3 numbers are going to be quite solid, and they are going to keep up to their track record of 18 to 20% compounded earnings growth. So I think despite the fact that HDFC Bank is one of those banks where it's been a favorite from the FIs as well as from the institutional side, and there's not much new to know about it, but nevertheless, as a portfolio stock, I think somebody who has invested has always made money irrespective of the fact that whether he's bought it at a high level. So I would believe that typically I would buy into some weakness, not probably at the current level, and maybe something like an ICICI Bank which is weak today. I think clearly that could possibly show a better risk reward, considering the fact that now most of the asset quality issues are over, and I think you could expect a significant run up on ICICI Bank if you talk about it on a relative basis to HDFC Bank.
Okay. The one on which we've seen a significant run up is the mid cap or a small cap stock, ITI. Yeah. And that one has started off well and has stayed higher. What did you make of these results?
No, in fact, Neeraj, what is important is the consistency. I think clearly, ITI has not been very well known for consistent numbers. Their earnings have been very volatile. So I think this quarter has been very good on the operating EBITDA side. But if you see the other income has been almost 150 odd crores compared to 75 crores. So I think clearly the other income has boosted the bottom line significantly. My sense is, I think hopefully, if we can probably see core earnings getting a significant boost going forward and sustainability of these numbers, then I think definitely there's a lot of value to be made here. And I think they are one of the larger hardware suppliers to the telecom companies. So I think clearly from an operational perspective, I think definitely despite the pop-up you've seen in the stock price today, we could see a further upside, going forward.
Okay, well, at the end of the second quarter, the management of ITI had guided for ending FY20 at 3,300 crore rupees. After the third quarter today, the management has reiterated that guidance and has also expressed confidence in meeting the same. Listen into the CMD Rakesh Mohan Agarwal as to how he will meet that revenue target.
I said yes, with the GST we shall be crossing around 900 CR, and we have already done it. Our team and stakeholders, they have been the contributor for this much achievement, and I assure you, and we are fully committed to complete this remaining target for us, and definitely we will be meeting our MOU target of around 3,300 to 3,500 for a very good category. So we are 100% sure that this will be achieved.
No, but how, sir? Because you need close to 1,900 crores, which means doing double of what you did. In fact, more than double of what you did in this quarter itself. So where will this revenue come from?
So basically, let me just explain you, because we do have around 1,100 crore project from the Gujarat Net. So out of it, we have done around 750 CR till third quarter. 350 CR is remaining. So that we will be completing the next 2.5 months time. Similarly, total Maharashtra project, we do have around 2,600 crore rupees. So up to the third quarter, we have completed around 800 CR. So nearly 800 to 900 CR we shall be completing from the Maharashtra project in this fourth quarter. And then from the manufacturing, SDP pipe, solar panel, Wi-Fi equipment, smart energy meters, and other equipment from the defense encryptions are also we are manufacturing. So out of this manufacturing sector, we shall be doing around 300 CR. So that is also a very good margin case. Similarly, we are, as I told you last time also, we do have around 25 offices, marketing services and projects offices across the country. So from those offices, we get the projects. So around 300 to 400 turnover would come from those offices and those project areas. NFS work is also being done, which is just under completion, and around 150 CR job is remaining. So that we will be completing in the next 3 quarters. Similarly, maintenance work for the defense, for the BSNL, MTNL, that is around 250 CR is total maintenance work. The very good margin case is there. So that we will be completing the next 3 quarters. So total overall target we have indicated around 2,000, and out of it definitely we are going to meet it.
All right, that's the management of ITI Limited, still holding on to those gains, double-digit gains, about 13%. Time now to also find out what has made it to Sharad Dubey's list of the Fab 4 stocks. Sharad, good afternoon.
Good afternoon, Devina. The first stock, as we are discussing and continue the discussion, is ITI. The stock is up 13%. It is the biggest gainer in the Nifty 500 index, and the Q3 numbers were up, and the revenues going up almost 47% up to 828 crore rupees, and also the net profit rose by almost 12.4 times. Other income also rose almost 2.1 times due to government grant as well as the write back of liabilities. Up next is Mindtree, which is up almost 2% as the company sees its longest winning streak in almost 3 years. The stock has risen by almost 7 trading sessions in a row. Next stock is Shree Cement, which is up almost 4% after fresh longs are seen with a high open interest of 13% and volumes trading almost 5 times its 20-day average. As per a note by Spark Capital, the cement dealers check the regions in the north, central and your west regions have actually increased the prices by almost ₹20 per kg, and apart from that, even the east and the northern markets have also seen a price hike. Second price hike also might be expected in the second half of January itself. And the last stock of the day is MCX India, which is up almost 6.6% after SBI Cap has maintained its buy rating and actually hiked the target price from 1,165 rupees to 1,330 rupees. The brokerage stated that the average daily traded volume is going to increase to almost 30,900 crore for the third quarter of FY20, and they expect that volatility which is seen in the bullion market as well as the energy market will actually augur well for the company. Back to you.
Right, Sharad, thanks very much for that. So those are the Fab 4 stocks of the day. Rahul, we spoke to Sachidanand about it, but do you have a view on Godrej Properties?
See, if you're looking at the long-term fabric on the stock, I quite like it. I mean, if you look at the horizon that you have of 6 months to even 12 months, even that looks good to me. So, in terms of targets, I would say that even the previous highs that we made closer to 1100 would be surpassed. My own opinion is, give it some time. This is a stock you should keep in the portfolio. I think you'll go well past 1240, 1250 on it. So technically, I think we are well poised on it. The stock kind of held its key averages well above the 200-day average. Again, trade with caution. The stock's around 960, 965, I reckon. So you probably want to keep a stop loss below 910 if you're a longer term investor.
Well, 4.5% higher, 968 and counting. And there's some of these select stocks which continue to rise and shine. And every dip gets bought into. It's very interesting to see how Godrej Properties has behaved. Some other stocks which were very active in trade yesterday as well, the likes of Phoenix Mills, for the matter, Aarti Industries, etc., are like kind of cut of the same fabric. They're just doing well, and dips get bought into. Look at Aarti, by the way, 4.5% higher, 894, very close to 900 now. This is at record highs, and adjusted for the split, it's actually at the levels that it was at before the demerger of the business happened, and that shows the kind of wealth creation that Aarti Industries has done. 895 and counting. Do watch out for this one. Pretty strong, the gains that we're seeing in this stock. The other one which is in news today, Avinash, is Aster DM Healthcare. What do you make of the announcement, and what does it do for investors in the stock?
No, I think, Neeraj, clearly, the kind of buyback price and the quantum of the buyback offer would be the key driver going forward. And I think, if you look at the operating profitability for the second quarter and the first half performance, I think numbers have not been all that, very solid. And it's a very fairly capital intensive business. Although they have a large pocket of space in Middle East, they're planning 2 hospitals in India. I would believe that, unless we see some sort of a core earnings growth on the operational side, I think the buyback will not offer a significant kind of re-rating for the stock. Typically, the hospital companies don't earn a very high return on capital employed because their capex cycle is extremely high. So I think I would believe that, despite the fact that the buyback may come in, it's not going to be a large offer, and what price it comes in is going to be the key element. So I think it's better to stay put for some time. The offer is going to be announced probably on the 9th or 10th. Only after that, possibly one could take a directional call as to what could be the next strategy.
Clearly, buyback price will be in focus, but remember, the stock was also in focus after last month. I guess the company announced that they will be shutting down their business in Philippines, which was loss-making. So let's see whether that has an impact on the financials or not, because that was making an impact on the consolidated earnings of Aster DM Healthcare. The IPO was 180 and the stock's at 165. Sharad highlighted cement stocks have been moving hard. In fact, a lot of them in the F&O space, be it Ultratech, Shree Cement, Ramco Cement, all of them are your top F&O gainers also for the day. And of course, outside that, you've got JK Cement right now, which has touched its fresh 52-week high. Ramco up about 5%. JK Cement is at 52-week high. It's off the day's low, but still sitting with gains about nearly 2%. Avinash, price high coming after a while. Of course, the first half of this financial year, all these companies were impacted because of volume growth. Now with price hike across region in the range of 10 to 20 rupees per bag, do you think now is the time for someone to enter into this space, considering a lot of these companies, for example, ACC, Ambuja, have been trading below their historical averages?
Yeah, I think if you look at pan-India players like Ultratech or ACC, I think definitely this price increase would obviously help them improve their margins, and clearly I think with the kind of volume growth they've been recording, hopefully I think the third and the fourth quarter could be much better. In fact, our sense is that the fourth quarter could see a lot of activity for cement companies, considering that a lot of infra projects actually get a significant boost at that time. And hopefully, if the budget announces some soaps for the infrastructure, then I think cement is a key element within this space. So I think apart from the volume growth, a kind of a pricing increase which has come in after a long time could definitely add to the margin. So ACC definitely looks attractive.
Okay, fundamentally ACC looks attractive, but technically, Sachtandan, any of these cement stocks that you would trade?
From a trading and a positional perspective, I will stick to Ultratech and Ramco Cement. Both the formations are very healthy. In fact, if you look at Ultratech, after 6 months of consolidation, the stock has given a breakout recently. We saw a pullback, and again, there's some resurgence in the price. So what we're expecting is that irrespective of the market, after if you give a headroom of a couple of weeks, so probably we may see Ultratech, scaling somewhere close to 4500, 4550 kind of a zone. So from a position perspective, I think this particular view will hold true until unless 4130 is not breached on a closing basis. So definitely, from the pack, I think Ultratech and Ramco Cements both are looking healthy. But from a trading perspective, reward to risk perspective, I think Ultratech is still sweeter, and 4130 should be the stop loss for the trade, and the stock should be reviewed somewhere close to 4500, 4550 kind of a zone after a couple of weeks.
Okay. Just pull up Apex Frozen Foods and Avanti Feeds as well. The stock had moved up to about 610, 611. That's Avanti Feeds in the morning. Came down, but I guess at 601 now in the session. But about 4.5%, 3.5% for both of these names. Not looking all that bad. Do you like this business, Avinash?
I think Avanti Feeds definitely looks good, Devina, because if you look at the business, it's a fairly asset-light model and very less leverage on the balance sheet. So I think hopefully, with US shrimp prices moving up quite significantly and, US being the larger market for them, I would not be surprised that possibly you could see a very strong third quarter also. But overall, I think within this space, the kind of track record Avanti has enjoyed in terms of the delivery and in terms of the quality of the product, I would believe that, probably on some dips, one could definitely take a call here.
Okay, that's Avanti Feeds, up 72% though in the last 6 months. The other one is Dr. Lal Path Labs, 1552. Last few weeks had reached about 1600, then came down, had gone probably sub 1500, closer to 1400 in fact, when the news of Reliance entering into the diagnostic space came about. And from there on, the stock is starting to steadily climb up again. Monthly performance has been disappointing, but nonetheless, it's one of those very good quality names that everyone's been talking about, and with the Amphi reclassification, this also makes its mark there. So you will be seeing some shuffling of the MF portfolios for the mid cap and the large cap space. Rahul Mohinder, Dr. Lal Path Lab.
Again, if you look at the shorter term on this stock, I think you might see a bit of pressure clearly because around this 1560 to 1580 level, there is very strong resistance. But having said that, the medium to long term outlook on the stock doesn't look bad at all. But again, within pharma, I would still kind of tilt towards looking at an Aurobindo or for that matter, even a Cipla, use those stocks, to buy on corrections. The stocks had quite a run up. You have to, what worries me is the risk reward ratio for a new entrant at this point. But again, if you're holding on, keep a stop loss below 1480 and latch on.
Well, it's time to take a look at what dealing rooms are recommending in the session today. Darshan Mehta is here with his channel checks. Darshan, good afternoon. What are you gathering?
Yeah, so a lot of big caps have been spoken about today. We've seen a little bit of recovery that's come in. One of the stocks that's been spoken about is Kakatiya Cement and Sugar. Of late, we've seen two sectors which have done extremely well. Sugar as well as cement, present in both of them, very, very high volumes in trade today. Also has a power unit, but nevertheless, this is a stock that dealers are indicating should be played in case you want to play either the cement sector or sugar sector. Cement, as we pointed out today itself, that there has been price hike that's been taken out across in several geographies of India. So one of the stocks. The other stock in which HNIs are very active is NOSIL. It's up almost 8% in trade. Some of the HNIs are actively accumulating the counter. We've seen recovery that's coming in as far as the cement, as far as the tire space is concerned. Supplies chemicals for the manufacture of tires. So dealers indicate one of the proxy plays to the tire space is NOSIL, very high volumes, almost 3 lakhs is the volume. And two stocks which have been spoken about, haven't gained significantly of late, is HEG as well as graphite. Some of the dealers indicate that HNIs are accumulating the counter at lower levels, so this is something that dealers are watching out for.
Okay, Darshan, thanks a lot for bringing that dealing room check. Just want to mark a few other stocks from the broader markets. You've got Butterfly Gandhimati, which is locked in upper circuit with gains of 20%, so good going here. Remember, barring last two sessions, you've got Zuari Global and Zuari. Both these stocks have been quite active in the last 7 to 8 trading sessions. So today, once again, both of them have been locked with gains of upper circuit, almost 20% higher, by the way, for Zuari as well as Zuari Global. And the other one, of course, Darshan's highlighted Kakatiya Cement, but you've also got something like LG Balakrishnan, which is up 9%. It's also locked in upper circuit with gains of about 10% thereabouts. So a lot of these mid-cap, small-cap stocks moving around. But at the start of the show, we highlighted Mindtree. Let's just pull up that stock, even the futures of that one, which is building up positions on the long side. Mind you, just not today. I think since the month of December, we've seen outperformance coming in from stocks like Mindtree, and NIT Tech has been moving higher because of the buyback that has been announced. Some short covering on the future side being indicated as open interest down 5%, and also futures trading at a discount of 5 to 5.5 rupees. Sachtanan, on the charts, the moves that we've seen for Mindtree, it's up for the 7th straight session today, trading above the mark of simple 200-day moving average. Do you expect more upside from current levels? Would you advise someone to book profit if they are making any, or stay put with it?
Well, I think it's better to stick to it with a trailing stop loss strategy. In fact, if you look at the overall movement, there was one particular juncture at around 830, and that particular level is also been surpassed on a closing basis. It still looks healthy, so probably we may see an extended move towards, say, 845, 860 kind of a zone. And I think for that particular movement, one should put a trailing stop loss now at around 832 on a closing basis and ride on to this particular move.
That's Mindtree, almost sitting at high point of the day, and also I think Infosys is at the lowest point of the day. It's a heavy weight on the index. Some selling pressure is seen there as well. Pull up that stock. I think it opened in the red. Some recovery came in, but once again in the last half an hour or so, the stocks come under some selling pressure. And with the move right now, it's moved below its 200-day moving average as well. The numbers come out on Friday. Ahead of that, remember, the stock options of Infosys also become really active. 750 call is the one which is sitting with maximum open interest, giving you a sense the stock could be facing resistance around that mark. Rahul Mohinder, Infosys ahead of the earnings on Friday. Do you suggest any strategy? Do you suggest any position here?
Well, I think first of all, if you look at the outlook within the space, it's definitely quite positive. But again, that does not necessarily mean that Infy is going to probably rally up. There's a very strong level on Infosys around the 755 level, which acts as a barrier. A, because you've got the 200-day moving average just below it. B, the recent high too, if you recall, yesterday was around the 753 marker. So I think this area is very critical for the stock to really break out of this. Unless it gets past it, I would be unwilling to really take a buy position on it. If you ask me this question from just a very short-term perspective, keeping in mind the results, I think we're tilted a bit toward the negative side if you're just looking at the very near term.
Okay, some other stocks, and one of them that is really flying high, and I think nudging on to fresh life highs once again, is Alkyl Amines. The other one, of course, is MCX India. Both of these stocks inching up today and trading at fresh life highs for itself, above 1200, 1239 for Alkyl, 1288 for MCX India. Do you fundamentally look at these amine stocks, Avinash, Balaji Amines and Alkyl Amines, but Alkyl in particular?
I think Alkyl Amines, has been a fairly low liquid stock, but I think in terms of the numbers, Neeraj, I would not be surprised that, typically I think their earnings growth should be pretty solid. Our sense is that, I think in this company, clearly from a user perspective, I think the specialty chemical space has been doing pretty well. So I think from a longer term perspective, I think one could definitely take a call. But I think, yes, one has to be a little careful in these commodity names, considering the fact that, input prices and end prices have to be both monitored very closely.
Okay. That's one stock that you need to monitor closely. What else, Avinash? What are you most convinced about? And what would your top bets for 2020 look like?
I think clearly, if you look at some of the capital market, ancillaries like CDSL, I think despite the fact that the stock has run up, I would believe that, with the kind of activity we are going to see in the capital markets, Devina, I would not be surprised that over the next 12 to 15 months, we could see strong earnings growth. And typically, these companies get a high multiple for the fact that their business model is extremely light, they are pretty cash rich. And I think the return on capital employed generated by them is in excess of almost 20-22%. 5%. So I think, one has to be extremely selective now. Another company which we found interesting is Chola Finance Holdings. It's a holding company for the Murugappa Group for the insurance and the NBFC business. It trades at around 510 odd. Our sense is that if you look at the insurance business, they are on the general insurance side. They have a very solid kind of franchise, a very strong asset quality kind of portfolio for the NBFC business. So here one could definitely see a kind of a gradual re-rating, considering that it's not a very liquid stock, but this group is definitely considered to be very conservative and credible within South India. So this could be also be a good bet.
Do you see any overhang of the family dispute which is on right now?
Yeah, I think Navneet, that is something which is obviously one of their daughters has represented that they want to come on the main board. I think this is not going to alter the the earning story for any of their companies. Our sense is that yes, this could definitely be a small overhang in the overall scheme of things. But if you look at the the other kind of credible parameters for the group, they have never been involved in any corporate governance issues, and I think their dividend distribution policies and their institutional kind of liking, especially from the fund side, has been pretty solid. So I think if you leave alone that factor, definitely I think this is one stock which has been ignored by a lot of people, and one could definitely give it a second look.
Okay, so watch out for a couple of these names. Closing strategies from our experts. To you first, Sachit Anand, your top call for the morning today.
From a activity kind of perspective, escorts is something which is on our radar, and it has been on the weaker side since it breached the 625, 630 kind of a zone, which was holding true for a long time. After that, we have seen a decent consolidation. Again, today's price action, it has really not sustained above the 625 mark. So we're expecting that the stock should slide further. In fact, on the lower side, we're expecting that it should slip below 600 mark. 595 should be the target for the for this particular trade. The stop loss should be placed at 620, and fresh short should be considered in escorts.
Okay. What about you, Rahul?
Well, I see Bharti Airtel, taking a dip down, and it's broken the key support of 445, which it was holding over the last 2 or 3 weeks. So I'm going to put out a sell on Bharti Airtel. I think we'll be looking at the first target of about 430. I think one should keep a stop loss at 451 on this short trade.
Okay, let's see. There's much spoken about fundraising plan by Airtel happening sometime. It's been going on for a while now. Maybe that is one reason why the stock could be doing what it is doing. I wonder if it will be a temporary dip down in the session today. Avinash, what are your thoughts here, Bharti Airtel?
No, I think Neeraj, as far as the ARPUs are concerned, they managed to get a fair amount of increase on the ARPUs, but the equity dilution is going to be pretty large, and I think earnings growth, at least for the next 12 to 18 months, is going to be extremely sluggish. So I think that is one factor which the markets would obviously factor in. But our sense is that looking at the fact that ARPUs have actually increased in the month of December, you could possibly see a very stronger kind of performance in the coming quarter. And hopefully, if these ARPUs are maintained, then at least at the operating EBITDA level, one could expect a significant improvement. So I would believe one should hold on, one should not exit. But yes, once the rights issue is over, the funding comes in, I think one major improvement could be a slight reduction on the debt side, which could possibly further improve the bottom line. But overall earnings growth is not going to be great, so the stock could remain in a narrow range. But yes, from a trading side, it could offer a decent kind of upside.
The other one is Inox Leisure. Now, while we've been seeing quarterly performance which has been strong, you've seen growth across various segments, not just content, but even their F&B segment has done well for them. Stock right now is up about 1.5%, had made highs of about 385. From there, slipped to levels of 360, and now it's inching its way back up, 378. Expectations from quarter 3? Do you feel that exhibitions, these exhibitors, PVR, Inox, both of them are in good shape?
I think normally, Devina, the third quarter is supposed to be a kind of a strong festival quarter for movie releases. So hopefully, we expect that the movie lineups could possibly trickle into better top line and footfalls for the eatable business. So our sense is that if one were to look at PVR, which trades at a significant valuation premium to Inox, I would believe that Inox is definitely well positioned both on the west and the south side. So clearly, from a longer term perspective, these are businesses which are not going to be replicated by some other companies. So I would believe that yes, on declines, one could definitely look at this company.
Okay. Okay, Avinash, we leave it on that note. Appreciate you joining us and taking us through your views on markets and also a couple of individual stocks. Vedanta right now is your top gainer on Nifty. Of course, contributing to the gains are your heavyweights today, HDFC Bank and also Reliance Industries, which are up in the range of 1% to 1.5%. Remember, we were talking about MCX, that's up 6% and it's touched fresh 52-week high. Such that if somebody had bought MCX, it's no longer in the futures and options market, would you suggest booking profits at current levels, or do you see more room for upside?
Well, to be honest, this is our 2020 pick. In fact, we have recommended this to our clients somewhere close to 1140 in the month of December. And we are expecting that this particular move should unfold towards the 1600 on a broader basis. If you look at the entire structure, we have seen a phenomenal, breakout from the triangular formation, which was in its, stages since 2012. So it's a very huge breakout. So it depends on, person to person. In fact, in case if someone is looking at short-term profits, then probably, he should consider levels somewhere close to 1345, 1350 and hold on to their long positions. The trailing stop loss from here on should be around 1200 and definitely, review zone would be somewhere close to 1340, 1350. But on a broader basis, it's a very healthy setup. Probably, from a 6 to 8 months perspective, one should, hold on to this counter. And we are expecting a price action somewhere close to 1600, 1650 within this particular year.
Okay, that's MCX for you. Rahul, what about Biocon? It's recovered from the lower levels of the day. The low was somewhere about 275. The stock fell 4% yesterday as well on back of some news coming in. Private equity player taking 2.4% stake in Biologics, that's the subsidiary. But there is an overhang on the stock. Futures also witnessing a lot of shorting. What are the charts suggesting? Is there more room for downside on Biocon? If somebody is holding shorts, what would you advise them to do?
Continues to be a clear sell to me. If you look at the entire construction of the fall that's happened over the last day or two, the volumes have really risen quite a bit, in this decline, which really shows you the reason why the stock's kind of moving down at such a fast pace. So even at these levels, I think we're definitely looking at about 265, 270 as a target on it. I would recommend remaining short. I don't think things can turn around unless we get past 290, 91. So from a short to medium term perspective, I would be negative on the stock. Of course, lower down, again, we could relook at, closer to 260, a longer term entry. But, immediate term, it's a sell on my list.
Okay, gentlemen, stay on. Let's start wrapping up the markets. And the markets have done, you would have to say that we've ending off the highs of the day, but we're certainly ending off the lows of the day as well. So two ways to look at it. And let's see what Europe ends today and what the US markets do today might well have a bearing on what we do tomorrow morning as well. But you would be happy with a little bit of green considering the kind of session that we had yesterday. The mid caps and the small caps should also come up on your screen, and they have done reasonably better. The last few days we now starting to get used to the pattern of the broader markets doing better than what the large cap indices do. But speaking of large caps first, let's see what's gained and what's not. Vedanta up 3%. Z bounces back after multiple days of a fall and multiple percentage fall as well. Reliance and HDFC Bank are your top two contributors. HDFC Bank actually gains a little bit from where it was when the show started off, and HDFC too about 1% higher. So you have your top three contributors at least on the indices, on the Nifty today. It's not done well. BPCL corrects a little bit more. Infosys is a very interesting one. Ahead of its results, it's starting to make some key movements. And then autos and Bharti Airtel. So Bata Motors, Hero MotoCorp, etc. have corrected a bit. And Bharti Airtel too has dipped a little bit, about 0.5% lower in the session today, as has State Bank of India, which continues to reel under pressure. Interesting movement in SBI today though. Started off reasonably okay, but ending the day in the red. What about the broader end of the spectrum, Navneet?
Well, needed slight outperformance coming as compared to the frontline indices, and as Neeraj rightly highlighted, after 2 days of carnage, at least we're closing the day in the green. So for the Nifty Mid-Cap Index, we did register gains of nearly 0.6% and outperformance coming in from the Small Cap Index. Individual stocks which stood out, Butterfly Gandhimati, that was the stock which was locked in upper circuit with gains of 20% today. You also had Zwari Global, and this one's been in focus for the last 7 to 8 sessions. There is some buying which is coming in every single day. today. 20% higher, that's the upper circuit limit. And MCX has been the stock, of course, upgrade coming in from SBI Cap. But besides that, the stock also touching its fresh 52-week high in today's trade, closing with gains of nearly 6%. ITI came out with the numbers, good set of numbers. They posted EBITDA gain versus a loss, which was seen in the corresponding quarter of last year. And right from the word go, reacting positively to the numbers. Cement as a pack was focused after Spark notes suggested, their channel check suggested that the prices have been increased across geographies between 10 to 20 rupees per bag. And you had stocks like Ramco and Shree Cement, which went up. They were also your top F&O gainers for the day. Indigo also had a good session. That stock went up by almost 2.5 to 3% in trade. And something like Dixon Technologies continues to be in focus. This one continues to witness buying interest. Look at that. Just in the last half an hour or so, the stock went up nearly 7%. On the losing side, Rani Engine, remember Rani Group companies were in focus. They were surging. Profit booking seen now. Since then, down 5%. That's the lower circuit. Biocon has been in focus. Shorting continues for the stock. While Indigo was up, SpiceJet traded lower today, and SpiceJet is closing the day with cuts of nearly 3%, Devina.
All right, so quite a fluctuating day today, but not at the lowest point of the day. We've closed above 12,000. A good 60-point buffer on the upside, actually. So 12,060 around those levels for the Nifty 50. 0.5% for the Nifty Bank as well, 11,400. 167 points after that draw run of 850 points yesterday. Sensex also just about nudging. We're about 85 points away from 41,000. But individual stocks and what contributes to the index's move today. Let's take a look. Reliance Industries completely flipped sides from yesterday. So that's and so is HDFC Bank and HDFC Limited. All three of them contributing on the positive side. What's losing then? ICICI Bank, Bharti Airtel, and Infosys seeing a knock of 1.5%.
Yep. We did see contribution coming back from these heavyweights today. But look at the broader markets, the entire listed universe. The market breadth continues to remain in favor of the advances. But of course, it deteriorated in the last 45 minutes of trade. Still, almost 2:1 was the ratio recorded. Pull up India Volatility Index as well. When we opened the session, remember, it was a gap up opening. VIX also fell sharply by 7 to 8%. But it's closing above the mark of 14.5 is where it closes today.
All right, and the turnover, just quickly looking at that. And then we also look at the Dow futures and how we are set up to move into trade. 32,400 odd crores on the cash market side, 18.5, almost 18.3 lakh crores. So on the futures and options side, the activity is really picking up over the last few days. Considering it's just the start of the week, Monday yesterday, you had about 12.5. Today you have about 18.5. Cash market though maintaining momentum. And finally, Dow futures. If
I think BSE cash is significantly higher. I don't know if something happened there. It's showing a figure of 1 lakh. I think we should cross that. Check that figure.
All right, and that's the Dow futures for you. So flat, no major cues coming in from there. But quick technical closing thoughts from our experts as well. Sachidanand, I want to come to you first on what we should watch out for tomorrow.
Well, when we started, we expected that this could be an inside bar kind of a day, and it has shaped out in that particular manner itself. So two levels from tomorrow's perspective. One is very clear that 12,150 is the threshold above which the entire equation changes for the market again, and we may see a good strong rally. The probability of that happening looks lower. But in case if we slip below today's low, which was somewhere close to 12,000, then probably markets may drag towards 11,885, 890 kind of a zone, wherein we expect that there could be some support getting created. Even if you look at the monthly options data, 12,000 is the level wherein the highest put concentration is still been very strong, and we have really not seen much deviation there. So probably this may be the final legs of the fall. If you look at the VIX as well, we are not expecting the VIX to really shoot up above 1550 kind of a zone. So probably we may see some cool off getting set there. So expectation is that this particular move may drag towards the lower end, but as we said, the broadening formation support is somewhere placed to 11,900, and that is the maximum that we are expecting in next couple of trading sessions.
Rahul Mohinder, what about you?
I tend to agree with that today's lows, or in fact 11,950, if I'd filter it out a little further, as I was mentioning before, very important level, and again continue to be tilted a bit negative from a near-term perspective. That breaching, I think the decline will escalate a bit more. If you're really thinking of turning positive, and this is where I've been telling traders, if you're really thinking the market's again going to go into a perfectly good upward swinging rally, I think for that normalcy to resume or that momentum to come back, better put that way, I'd like to look at 2 or 3 stocks as well. So, I want a Reliance Industries, clawing back above 1540. We need to see an HDFC Bank get above 1275. We need the Nifty spot to get above 12,220. So there's work to be done. Unless we really get past these key levels, I think we'll continue to be in a stage where we'll be tussling between the zone of 12,220 odd on the upside, 11,950 on the downside, and we'll kind of mark some time or have a bit of a decline in this phase. So keep an eye on those levels. That's the way I'd like to put it. I don't think you need to immediately think of this as a buying opportunity.
Right. We'll leave it at that, gentlemen. Rahul, as well as Sachidanand, thank you very much for taking out the time and giving us your thoughts on the show. And on that note, we're also done on time here on Countdown. Thanks so much for watching. We've closed the day on a positive note, hopefully. Let's see what comes about tomorrow. Thanks a lot for watching.